We left all rates unchanged. The key paragraph in the statement is paragraph 18, which I'll read out for those who haven't read the statement. Still weak demand and the rapid pace of recent disinflation are factors supporting monetary accommodation. However, the weak transmission by banks of the recent fall in money market rates into lending rates suggests monetary policy shifts will primarily have signaling effects for a while. Nevertheless, these signaling effects are likely to be large because the Reserve Bank has repeatedly indicated that once the monetary policy stance shifts, subsequent policy actions will be consistent with the changed stance. There is still some uncertainty about the evolution of base effects in inflation, the strength of the ongoing disinflationary impulses, the pace of change of the public's inflationary expectations, as well as the success of the government's efforts to hit deficit targets. A change in the monetary policy stance at the current juncture, is premature. However, if the current inflation momentum and changes in inflationary expectations continue, and fiscal developments are encouraging, a change in the monetary policy stance is likely early next year, including outside the policy review cycle. I'm sure you can read the rest of the statement and parse. As far as the monetary policy framework, the new monetary policy framework goes, we are in discussion with the government and we hope to finalize a framework shortly. The government has indicated that it is comfortable in setting a target of 4% plus minus 2%, as suggested by a number of committees, including the Urjit Patel Committee, for inflation beyond 2016. Second, there is substantial financial stress still in some sectors. We have been taking a holistic view instead of a sector-by-sector view, keeping in mind the need for flexibility in financial restructuring while limiting the extent of forbearance. In the next few days, I hope to be able to announce two key relaxations. One is a move towards 525 restructuring for existing projects, which are standard, and also to allow banks to take equity in restructurings to a greater extent than they currently can. We're discussing the price at which such conversions can be done with SEBI as of now.